As US Treasuries continue to benefit from the emerging market fallout, I've invited Jacob Kirkegaard of the Peterson Institute for International Economics to share his outlook for the European bond market. Can they fare the same? Jacob, thank you for joining me. Firstly, can you comment on investors' shifts to Treasuries to escape emerging market turmoil? A smart move in your view?
Well, I think this just mirrors what investors always do whenever there is a whiff of emerging market troubles. Well, they go for the traditional safe haven and the best safe haven we still have, which is U.S. Treasuries. I think if you had alternatives around the world that were, fairly priced, then they would go there. But if you look around, you see German bonds, you see Japanese JGBs, they're all extremely expensive at the moment. So once again, Treasuries is the least bad safe haven.
Now, we know that US Treasuries have rallied of late, looking to make their biggest gain in 20 months. But is this wave likely to be felt in the European bond market?
I certainly think the ECB will do whatever it can to insulate the European bond markets from any spillover, both from the Treasury market or indirectly from emerging markets. So no, I don't think there would be much of a spillover to the European markets because they continue to be driven predominantly by domestic factors inside the euro area.
Following December's huge European government bond sell-off, is this a declaration of wary creditors returning to Europe or an indicator that this flood of supply could now leave investors with more paper than they want?
I think it's a little bit of both. Although I will say that I think it really represents a significant return of a lot of real money investors that have basically been sort of on the sidelines or only in German bonds in the European markets for quite a while now. So therefore, I don't think that these investors are going to be feeling that they have too much paper because they've been out of the markets for so long.
Finally, then, the coming weeks will see bond auctions from Japan, France, Germany, Spain and the US. Jacob, what's your performance outlook?
No, I think that they will. I think they will all do quite well. I think in Japan, obviously, you have the Bank of Japan, who is going to be a willing buyer of a very large amount of it, and then in the case of France, which is a country where you have recently seen some tentative political moves towards more reforms from President Hollande, and in any case, France has never really been affected by the sort of traditional jitteries of the European periphery. And then, of course, finally, Treasuries, which will benefit from its traditional safe haven status. So I basically think that all of these auctions will proceed with high levels of subscriptions and very smoothly from the perspective of the issuer.
Jacob, thank you very much. That's all we've got time for right now, but I'll be looking at Spain in further depth tomorrow, so do click back to Dukascopy TV.